Hi everyone, my name is Simon Misiewicz from Optimised Accountants, and in this video we're going to be talking about rental yields in the United Kingdom and the fact that rental prices are going up. So if you're an investor, wow, is it a good time to invest? I would say so actually, and here's why. So house prices in the United Kingdom are dropping on the whole, but if we look at the individual areas where you might wish to invest, that is where you want to pay particular attention. East Midlands has now dropped by 3% on the whole compared to last year. The monthly decrease is 0.8% as well. Worrying times, especially when, if we look at East Midlands, Nottingham for an example, where I used to live, the local authority has gone into collapse. So economically, the area looks in bad situation. Now, if we look at other areas, London, minus 6%, house prices now 505,000. It used to be just out there in terms of house prices, but actually average house price at 505, not too unreachable for many people, especially investors. So we've got to look at these areas very carefully. Now the UK rental market is doing really well. Let's have a read. Private rental prices paid by tenants in the UK increased by 6.2% in the 12 months to December 2023, which is provisional. This was unchanged from the annual percentage change in the 12 months to November 2023. So we haven't seen so much. It's been a bit of a drop off, which you would expect. Not many people are going to be moving in December, and represents the joint highest annual percentage change since this UK data series began in January 2016. Is this going to change? No way. No way. House prices are just going to go up. Rental prices are going to go up. How it's sustainable, I don't know. It just means that people will have less money to spend on other things. Most of their income will be spent on living in their home, which makes it really difficult for the economy to sustain itself. And therefore, there's got to be concerns over recession yet again. Now, I wanted to show you this graph. This is a crazy nuts thing that's going on. Northern Ireland. If you're living in Northern Ireland, please tell me what's going on, because house prices are going crazy nuts over there. Rentals, crazy nuts going over there. It's amazing. What is going on? Please do share, because this is just amazing data that's coming out. If you're an investor, you're not looking at Northern Ireland. Why not? Why not? It just seems to be such a good area to be investing in. If we look at other places, Wales doing really well as well, and during the summer times that will only improve. Scotland and England kind of not doing it as well, but it's still very high. So we can't dismiss this. We're not talking about minus numbers in terms of rents. We're still talking way above 6-7% here, apart from if you're in Northern Ireland, you go even higher. UK annual rental increase by region, London outstripping every other area, and yet house prices are going down, house rentals are going up. So there is definitely an appetite to live in London, but people are choosing to rent. That's interesting. So if you're an investor, maybe London is still a good area for you to go into. Other areas to note, Yorkshire, Southwest, West Midlands. Every other area is doing well, but those are the key areas. Rightmove did a great data set here, and I want to share this with you. Again, pause this video as much as you want. But it is a return on investment. Where should you invest? If you're looking for bang for your buck, not looking for capital appreciation. Capital appreciation is over 10 years. You'd hope it would be worth a lot more than what you bought it for. If you're looking for income, then you're looking for rental yields. So as an example here, if I look at this data set, you would say Northeast is a very good area. Talk about Newcastle, Sunderland, that kind of area. And then if we go to the next one, we're looking at 7.4% in Wales, and the other areas aren't doing so well. West Midlands at 6.6%, not so bad at all, but Wales 7.4%. And again, if you compare that to the other graph here, the further north you go, the more rental yield you'll get. Why? House prices tend to be cheaper there. It's pretty obvious when you say it, but actually looking at this data set, really interesting to see what's going on here. But again, only area for that south part here is West Midlands and Wales. We don't have a data set for Northern Ireland. Please do share it if you have that information. Superloop have also provided a lovely data set here by city this time around, and looking at the rental yields. And if you look at those, then 8.5% in Sunderland, as we said before, the northeast. If we look at Middlesbrough, 7.85%, not so bad. Newcastle not on there, which is surprising. Dundee for Scotland, Burnley, again north, Glasgow, Aberdeen, Liverpool leading the way northwest, Blackburn again northwest, northeast for the northeast. So really good rental yields going around. Take time not just to invest in your area, but to look at these other cities as well. Because if you're looking for better rental yields in the future, these cities may be the best opportunities for you in 2024.